This is an example of what's called key level trading. So basically, all you have to do is wait for the market to enter a particular key level, and then you take a position depending on the direction of the market at the time. Now, I have a simple strategy at which I use to trade this. I don't just trade key level just because the market is touching there at the moment. I trade it after a reconfirmation, right? So the market goes there, comes back and reconfirms by going back there, then we take the trade. I'm going to show you a brief example of how this works and how you are likely going to use it to make money in the market whenever you're trading. So this key level right here, I'm going to give you guys a specific one I'm using to show you this later on in this video. So go ahead and stay with me to the very end. I'll just keep any single part of it so you don't miss any single bit of information from here. So looking at the right here, you can see that we have different identifiers right here. We have the weekly open, we have the Monday mid, we have the daily open, we have the Monday low, previous month mid, and previous week low. Now, in all of these indicators you see over here, the weakest one, or let me say the most insignificant one, is mostly the daily open. This particular one doesn't really give us much of a useful indicator or level at all, right? Because most times the market just comes and blows it or goes down below it, and stuff like that happens most of the time in the daily open. So try as much as possible to neglect or ignore the daily open signals or key level positions. Now, the other ones you might like to take a look at is, especially if you are not in, if the day you're trading is not a Monday, then you might likely want to take a look at the Monday signals, whether the Monday low or the Monday mid. But regardless, the strongest one in all of these mostly comes from the monthly and the weekly positions. But we're going to say weekly positions because the weekly position has both the weekly low and the weekly open, right? So the previous week low and the current week open and stuff like that. So let's go ahead and see how this works. Okay, so let's go ahead and scroll back and see different examples of what you could have done here, right? So let's just go ahead and start from here. So basically what you have to do is wait for the market to confirm a particular direction. Remember, you're trading with a trend. Never trade against a trend, right? So if the market is going up, that's higher highs and higher lows, that means you should be looking at uptrending markets, or you should be looking at taking buy positions using this strategy. And if it's going lower highs and lower lows, you should be looking for taking short positions. Now, in this particular situation, you can see clearly that we have a high or a low over here, and the market has actually retraced. It actually started somewhere over here, but I'm going to use to these indicators and start it over here, right? So you can see clearly that this happened over here and the market retraced. Now, at this particular level over here, let's go ahead and see what level we have over here. So this should be the, okay, this is the Monday mid, right? So in the Monday mid level right here, the market did react over here, but it didn't give us any specific reconfirmation, because you can see over here, it didn't come down to, reconfirm over there. So it blew up and hit the, I think this should be the weekly, right? So let's go ahead and see. This is the weekly open. So it hit the weekly open level, and then it did come down and then finally went back up and reconfirmed. You can see the different reconfirmations right here. So you taking this particular position right here at this particular level is a very good trade. Now, this particular trade happened on Tuesday. So this was early in the trading week. So taking this particular position over here, put your stop loss over here, and maybe going to something like 3:1 to reward ratio, or maybe putting your take profit at the Monday mid right here. That's a good trade, right? Now, if you decide to go ahead and trail your trade, which not everybody knows how to do, then perhaps you actually stand a chance at making way more money than that, right? And this will be a very huge profit for you. But regardless, the most better way to trade this is, and when you enter a trade, your target should be the next significant level, which excludes only daily levels, right? And you can see this one quickly hit its profit. So this way you'll be able to earn a lot of money using this particular strategy. Let's say another example, right? So this market actually continued going downwards over here. It got to this particular level where it reversed back up. And if you have to look properly right here, you will see that the market actually reacted here, which is at this level, the previous week low. it did come to the previous week low and react over here, did go up and came back again to react over here once again. But using our particular trading pattern and our trading ideology, we're not going to take this trade. This trade happened on Wednesday. We're not going to take this trade. And the reason why we're not going to take the trade is because at this particular moment in time, let's go ahead and neglect the trade has happened all the way from here to here. Now, at this particular moment in time, consider you're seeing only the market that is coming from here, right? Like this, okay? Only market that's going from here to here, right? You are basically going to see this trade as a potential continuous downtrend, right? Because we don't have any actual higher highs. Now, we're not really going to consider this as a high because it doesn't really have a proper setup for a high. So we're not going to consider it as a high. So we don't really have a proper higher high. So we're not really going to take this trade. Unless you want to take the risk, then that's up to you, okay? Consider there's a reconfirmation there, but that's a different scenario. So basically, we're going to have to miss out on this trade, and it did come up over here and obviously went to that high where we would have take profit or stuff like that. And the market did continue moving over there. Now, it did also happen to do probably the same thing as well. You can see over here, the market hit this level, this Monday mid level right here. And it did come down and went back up again to reconfirm that same level. But we still have the same problem. And the problem is right now that the market has changed its direction. It has changed its structure because this is a high and this is a higher high. On top of that, this is a low and this is a higher low. So basically, in our mind, the market has changed its direction. And now we have markets reconfirming themselves under this particular, using the Monday mid as a resistance point. Now, this becomes an issue for us because in our trading knowledge or trade strategy, we do not trade against the trend. And this will warrant us to take a downward trend position. So if we had taken this trade, we would have still made profit from there. But remember, we are trading with our trading strategy or trading pattern. We do not go against our trading trend. So that would probably mean that a lot of us are still going to miss out on this particular trade. Now, you might ask, so if we're missing out on all this trade, then how are we actually going to make money from here? Well, the good thing about trading or Forex market or cryptocurrency trading market as well is that they have a lot of pairs, right? You don't have to stick to a particular one. So this is currently GBP USD at this 15 minutes time frame. So it's a very fast moving, not that fast, but it's a good moving pair and a good moving time frame. So you can easily switch this as well from, let's say, GBP USD to EUR USD. And you can choose any trading chart you want over here. So basically, you can see that the market or the indicator still obeys the same rules if you have to take a proper look at this whole thing, okay? So you can see over here we have, let's see what we have right here. Okay. So we have, starting from here, we have a downtrend, obviously, because we already have a lower low. Now, this is actually a market reaction at this point because the market did act as if it's going to go up and then started coming down. And it did come down, and here is another thing over here. It didn't just react over here. It didn't just come over here and then play around. It actually gave us a candle structure. If you look at this properly over here, you can see that this is a bearish hammerhead candle structure. It's like a T, but inverted T, right? So when you see something like that, it's a bearish candle structure. Now, another candle structure is a bearish engulfing candle structure pattern. So in order to make this position strong, this particular level gave us two different candle structure patterns. Number one, there is the market reaction over here, which is a separate topic on its own. Coming back to the candle reaction, the candle structure pattern, we have the bearish candle structure over here, which is the T, inverted T. That's the hammerhead, bearish hammerhead. And we also have an engulfing red candle structure pattern as well. Now, you know that we are already ignoring the daily trades over here. So we don't normally take the daily trades. So this means that if you actually go ahead and take out this short position as well, at this particular, let's just say that you ignore the bearish hammerhead and finally give you engulfing candle structure pattern, and you go ahead and take a trade right there, putting your stop loss just above the level over here, and you take profit being to the next level, which is at this particular point. Now, this is a clear 2:1, 2.69:1 risk to reward ratio, giving you an easy profit. You can see that most of these trades don't really take much time to hit because these are targets. These are key points. These are key levels in the market, and the market tends to meet them very easily. So yes, you don't have to stick to a particular market using this particular strategy. You can move from one market to another and just go ahead and tell yourself, okay, so this is how I trade. Do I trade with a trend, or do I just trade based on reconfirmation? If you trade based on reconfirmation, then that's cool. That's okay with you. They trade that. Sometimes you make money, sometimes you make loss. That's okay, right? What you know is that you're going to make way more money than you're going to lose at the end of the day. Now, if you are sticking to the strict rule of only trading with the trend, then just be okay with missing out on a lot of trades. Only know you're trading with a trend, right? So, for example, let's say over here, let's say a person who is trading with reconfirmations, right? Let me show you where you will lose money. Now, seeing fully well that this market is still not on a downtrend over here, and there's really no, let's see. So this is really not touching it. Okay, so there's really nothing much happening over here. We do have market reaction at this point over here, but coming down to this place, there's no actual, I mean, look at this is a very long engulfing pattern. So if you go ahead and take a trade over here, it doesn't really make sense putting your stop loss over here. Remember, the whole essence is to take as little risk as possible, right? So I would definitely not classify this as a good entry, bearish entry right here. So let's say you're only trading with reconfirmations and the market did go up, come down and then hit here and reversed again and hit here. Now, you're basically going to be like, okay, the market has reconfirmed this and you're going to take your short position right here. And if you look properly, we do not have anything close, right? So the only place we have the next candle over here is way down here, which is quite a long way out. And finally, what happened, market did come down and come back and broke through here and obviously gave you your stop loss as quickly as possible. So sometimes it's not always wise to trade based on the confirmations, but sometimes actually the more you trade this, the more you will know the traits to avoid. So don't really be scared of, anyone you want to use to trade is okay, right? So if you always trade this particular strategy or indicator, then when you're entering a trade right here and you look way below here, there is no clear take profit region, then you might probably not want to take the trade, right? Now, some people might say, okay, you know what, since there's no actual take profit region right here, I'm just going to take my profit at the next, at the previous low, which if you've done this like this, it's also meaningful. But at the end of the day, you see that you still lose money in this trade. So it means that it doesn't really make sense. Now, for others who actually want to trade as well, the next key level you're probably going to be looking at is back to this previous weekly key level. Because if this market reverses and comes back over here and gives us any candle structure, then it's also a very good way of trading as well. You are not always guaranteed of profit, but every single time you make profit, it's always massive. That's just what you have to know. And in all of these guys, let's just say, just go ahead and remove the daily open, right? So the name of this candle is called the Spaceman BTC key level V13. Just go to your indicator and type key level. And it's going to bring you over here. You can see over here, key levels Spaceman BTC. Just go ahead and click on that. And while we are at this, let's go ahead and type in BTC USDT to see, since it has BTC in its name. And switch this to crypto. And use BTC USDT. So we're going to be using the Binance, okay? The Binance Market rather. And you can see actually, it's kind of a whole different ball game in the crypto section. But we're not going to talk about this right now because this is probably going to confuse you a lot, right? So just go ahead and stick to the Forex one. We're probably going to talk about this in the crypto one in our next video. If you guys are interested in that, just go ahead and leave the comment in the comment section. But looking at this, actually, it's so interesting, right? Because I mean, the market is actually reacting very properly to this indicator. Like the BTC market is reacting very well to this indicator, if you look at it properly. Anyway, so that's gonna be it for this video, right? So that's gonna be it for this video. Make sure to go ahead and give this video a thumbs up and subscribe to the channel. I'll see you in the next one. Take care. I'm happy ending.